A vast amount of people across the world are engaged in Bitcoin trading. It's because trading Bitcoin is the best method to earn huge profits. For those who are new to this, they might be wondering where to start or what are things they should know. Now we'll tell you how is the basic Bitcoin trading for beginners 2021. How did Bitcoin trading work differently than investing in Bitcoin? People who invest in Bitcoin usually do so because they intend to hold on to it for a long time. As a result, they believe that the price will eventually rise, regardless of the ups and downs along the way. Investors usually invest in Bitcoin because they believe in the technology, ideology, or team behind it. The currency is tended to be hodled by Bitcoin investors for the long term. An old 2013 post in the Bitcoin Talk forum produced a typo of the word hold, in which the term hodl was born. Bitcoin investors buy and hodl for the long term, while Bitcoin traders buy and sell Bitcoin in the short term whenever they think a profit can be made. Bitcoin is seen as an instrument by traders for making profits. The technology behind the product they're trading can sometimes be a little concern to them. What is the Bitcoin trading advantages? To begin, Bitcoin is very volatile. Therefore, you can correctly anticipate the market. You can make a nice amount of profit. The second advantage to Bitcoin trading is that it is open all the time. Unlike traditional trading, there is an opening and closing time for traditional markets like stocks and commodities. Bitcoin allows purchases and sales whenever you want. Lastly, due to Bitcoin's unregulated environment, it is relatively easy to start trading without lengthy identification and verification processes. What are the different types of traders? Trade methods differ significantly among traders, and not all methods work for everyone. In day trading, several trades are made during the day. Short-term price movements are used to profit. The average day trader spends most of their time staring at a computer screen, closing all their trades at the end of the day. Scalping is a day trading strategy that many traders are talking about. Scalping is the practice of making substantial profits by exploiting slight price changes. This form of trading forces on extremely short trades and is based on the idea of making small profits, repeatedly reducing risk, and creating advantages for traders. A scalper may make as many as hundreds of trades in a single day. Swing trading, on the other hand, tries to capitalize on the natural swings in prices. A swing trader looks for the beginning of a specific price movement and enters the trade. After that, they await the end movement and take their profits. Rather than watching their computer screen all the time, they try to look at the big picture. It's possible for swing traders to hold a trading position open for weeks or months until their objectives are achieved. What are the trading terms? A Bitcoin exchange is an online service that automatically matches buyers and sellers. A complete list of buy and sell orders can be found in the market's order book, which is displayed on the exchange. Since the introduced asking price that sellers request, Bitcoin's price actually refers to the price of the last transaction conducted on an exchange. It is important to note that there is no single global Bitcoin price that everyone follows. It's uncommon for the price of Bitcoin in other countries to differ from the price of Bitcoin in the US, since the major exchanges in these countries handle different trades. Additionally to the price, you will also come across the terms high and low. Prices that were the highest and lowest in the last 24 hours are referred to as these terms. Volume is another important term. In the given time frame, it indicates the total number of Bitcoins that were traded. Trading volumes are usually large with significant trends occur, while low volumes appear when weakened trends occur. Volume is increased with rising prices and decreases with falling prices when there is a healthy upward trend. The determinant of a sudden change or direction in the price is just a minor correction of beginning of the opposite trend. Experts recommend checking how significant the trading volume is. What are different types of orders? Orders can be categorized into three types. A market or instant order is one that is instantly fulfilled at the best possible price. You do not stop buying Bitcoin until you reach the amount requested in a market order. Keep in mind that the market orders may lead you to pay more than you intended. A limit order, on the other hand, will allow you to buy or sell Bitcoin at a price you choose. It is possible that the order will not be completely fulfilled, since there are not enough buyers or sellers to satisfy your requirements. A stop-loss order has a similar effect to a market order. As a result, if the stop price reaches a certain point, the market will begin to sell your coins at any price until you fulfill the order. When trading on exchanges, you may also encounter market fees and taker fees. It is the goal of the exchanges to encourage people to trade. In other words, they want to make a market. As such, every time you create a new order, they cannot be matched by an existing buyer or seller. You're basically a market maker, and you will usually have lower fees. The market maker already exists to fulfill the orders the market taker places, so their orders are instantly filled. Due to the fact that the takers remove business from the exchange, they usually pay higher fees than makers, who add orders to the exchange order book. What are the common trading mistakes? Risking more money than you can afford to lose is the biggest mistake you can make. Determine the amount of money you feel comfortable with. The worst case scenario is that you lose it all. Stop trading if you find yourself above that amount. You can make bad decisions if you invest too much money in trading. Trading is a very risky business and should not invest more than you can afford. Not having a plan clear enough is another mistake people make when they start out trading. As a result, they don't know why they entered a particular trade, and more importantly, when they should have exited it. Clearly defining profit goals and stop loss levels is therefore crucial before initiating the trade. Another mistake is leaving money on an exchange. Do not leave money on an exchange with which you are not currently trading. It means you are unable to control your money, and if it sits on the exchange, you may end up losing your money if the exchange is hacked, goes offline, or stops operating. Be sure to move money you don't need in short term for trading on an exchange into a Bitcoin wallet or bank account for safekeeping. Getting caught up in the emotions is a mistake that you should avoid. Many traders are controlled by two basic emotions, fear and greed. The fear of losing the trade early may stem from reading a disturbing article, hearing an unsavory rumor, or getting scared by a sudden drop in price. A second major emotion is greed, which is also based on fear. Fear of being left out of something. It's so tempting to ignore people's talk about the next big thing or to ignore the price increase when they suddenly spike. So you may enter a trade too soon or even delay closing an open trade. It's important to remember that emotions often rule our actions. Therefore, don't say, "That wouldn't happen to me." Identify your natural tendencies towards fear and greed, and make sure you follow up with the plan that was outlined prior to trading. The consequences of not learning from your trades will surely bite you. You can always learn from a successful or unsuccessful trade, regardless of the outcome. The strategy of maximizing profits does not work in all cases, and the process of making money always involves some loss as well. Making money isn't necessarily the most important thing. Rather, it consists of whether or not you are able to learn anything that would help you trade better in the future. Like any venture, if you want to succeed at trading, you have to invest a considerable amount of time and money to acquire the necessary skills. Perhaps you should avoid trading altogether if you're intent on making a quick buck from trading. The prospect of easy money can never be risk-free or without a downside. Nevertheless, if you want to learn how to become a Bitcoin trader, then you should use the best tools available and keep learning. Did this video somehow help you in understanding the basic Bitcoin trading? Let us know in the comments below. Thanks for watching. See you in the next one.